Hello, fellow investors. Today, we've got an exciting exploration ahead as we delve into the dynamic realm of microchip technology. Our spotlight is on MCHP, a semiconductor company that stands out for its undervalued quality and promises of massive upside potential. Buckle up, it's time for a deep dive into the intricacies of MCHP. Let's rewind to 2013, a standout year for MCHP with an impressive growth of approximately 27.5%. Fast forward to the present, and MCHP is positioned towards the mid to upper range of the 52-week range, flaunting a yield just under 2%. What's particularly intriguing is its current trading status with a forward P of 16.8. marking it as a potentially enticing option for savvy investors. If you had invested 10 years ago, you'd be looking at a remarkable gain of just under 300%. And we're here to uncover the drivers behind this noteworthy performance. Let's embark on a journey through MCHP's financial landscape. We'll scrutinize their income statement, dissecting the top and bottom lines. The revenue trajectory is nothing short of remarkable, ascending from $5.3 billion in March 2019 to a robust $8.4 billion in March 2023. Net income, the heartbeat of any company, tells a compelling story, experiencing a meteoric rise from $356 million in 2019 to a staggering $2.2 billion in 2023. We'll navigate through the intricacies of their financial performance, acknowledging the occasional inconsistencies but highlighting the overall upward trajectory in both top and bottom line figures. A health check of the company is incomplete without examining the balance sheet. Our focus turns to the critical interplay between total cash and total debt. While the latest quarterly report reveals a dip in cash and short-term investments from $431 million to $257 million, the silver lining lies in the significant reduction of total debt, plummeting from around $10.3 billion to a prudently managed $6.1 billion over the past 5 years. This financial discipline underscores MCHP's commitment to a robust and resilient balance sheet. Let's zoom out for a moment and gauge MCHP's standing within the semiconductor industry. A comparative analysis against industry peers, including Marvell Technology, STM Microelectronics, unveils MCHP's position. Despite being the second worst performer in the last 5 years, MCHP's growth paints a broader picture of the semiconductor sector's overall resilience and strength. Now, let's lift the curtain on institutional activity. With a staggering 91% institutional ownership, MCHP has captured the attention of major players. Institutional sales totaling around $3.8 billion over the last 12 months are juxtaposed with a significant influx of funds, with the pinnacle being a massive $58 billion in Q2 of 2023. While institutional movements provide valuable insights, the golden rule prevails: conduct your due diligence before mirroring their actions. Shifting gears to the reliability of dividends and overall financial metrics, MCHP earns a dividend safety score of 60. As a large-cap company, it weathered the storm of the last recession by not only maintaining but increasing its dividend. The impressive 39% dividend increase over the last full year, coupled with double-digit growth over the last 5 and 20 years, positions MCHP as a solid candidate for income-seeking investors. The dividend yield theory further affirms its undervalued status, with a current yield above the 5-year average. Let's pivot to the cash flow narrative. MCHP's free cash flow, a pivotal metric in assessing financial health, consistently stays below 60%, signaling prudent financial management. The company's free cash flow per share, though not skyrocketing every year. Reveals a commendable trajectory, moving from 142 in 2014 to a noteworthy 570 in 2023. Sales growth, a vital indicator of business vitality. Boasts double-digit figures nearly every year, with the last 2 years showcasing a robust 24% and 25% growth, respectively. An interesting note here is the absence of share buybacks, replaced by share issuances over the last decade. While this dilutes shareholder positions, it's essential to weigh this against the broader financial narrative. Now, let's crunch the numbers. We'll explore various valuation models to unravel the intrinsic value of MCHP. Graham's valuation model, Multiples valuation model, DDM, Dividend discount model, and the DCF, discounted cash flow, model converge to a unanimous verdict: significant undervaluation. The intrinsic value derived from these models hovers around $131, presenting a stark contrast to the current market price of approximately $88. Wall Street's vote of confidence comes in the form of a projected price increase, foreseeing a 15% upside to around $100 in the next 12 months. In conclusion, MCHP emerges as a compelling contender for inclusion in your investment portfolio. A substantial margin of safety, coupled with strong financial metrics and favorable forward-looking data, positions MCHP as an acceptable buy. As always, exercise your due diligence. Align your investment decisions with your strategy, and consider the broader market dynamics. Is MCHP on your watch list? Share your thoughts in the comments below. If you found this analysis insightful, don't forget to hit the like button. Subscribe for more in-depth insights, and stay tuned for our next episode. Happy investing!